Okay, VIX Trader here with another video on how to trade the VIX. I thought I'd cover Friday, November 16th, 2018 trade, just so you guys can see what kind of stuff I'll be posting, so you get a feel for it. I'll be posting a sheet like this in a video like this all the time. I'll explain to you what these things mean. I'm going to try to get a website up eventually where you can just look at it on the website. But in the meanwhile, you can always pause the video and go over. Every day I always read my own trading rules. Each trader needs to have a trading rules, and a day strategy, what they're going to do. You just can't go in a day and throw darts thinking things will work. You have to have a strategy and you have to have trading rules. Risk management is job one. You cannot blow up your account, and put your account in a negative or have it quickly plummet to zero. You need to, risk management is job one. You can trade. As long as you have money, you can trade. But if you don't have any money, you can't. So you got to make sure that you don't put yourself in a position where you could be losing a good chunk of your account. So rule number one in the red: never, never, never over leverage, which means I don't short too many shares. Or if I'm going to go long, meaning buy shares, I'm not going to buy too many shares, because if the position goes against you, your account can quickly lose value. And you're in a bad situation. So I don't hold large positions. I have up market trading rules, down market trading rules. I'll explain what these things mean. The MMX, the VIX, the SPX at 6 p.m. In the future videos. But just to give you a taste of what the kind of stuff I'll be posting. That's what this video is. I generally like to short TVIX when the spiders is at the 3-day moving average or the 5-day moving average. Typically in the up market, the 5-day moving average will be below the 3-day, which is the yellow. The yellow is the 3-day, and the 5-day is the red. So my plan for the day was, if the spider is the SPY ticker comes down here at the 3-day, and see how it holds. See if it holds the upward trend line and holds the 3-day. I will short the TVIX and try to sell it somewhere around here for a profit. So the day didn't plan out that way. At the open, this is how the day went, the 16th, that Friday. Fridays are always tough trades because it's the end of the week and anything can happen. I just see the spiders came down, but didn't touch that 3-day moving average like I was hoping to, so I didn't execute it. I waited and waited till it came down to it, and it didn't happen. And it kept rallying back. This yellow line is the break-even line, and it went positive for the day, which hit the upward part of that channel. And the computers, most trading, 80% of trading is algorithm by computers, and they just follow these channels, enjoy these short-term channels. This is a 15-minute time frame, and it came right back down and looked like it was going to hold and might even break right at the 5-day moving average. And I was going to buy it, and I kind of missed out on it. Some news came out about tariffs, and things spike really quickly, and I missed it. And when you're up here, to buy up here, to short the TVIX up here, which would be essentially be right down here, there isn't a whole lot of profit. It's $43. I'd be shorting it at, and it goes down to maybe 42 change, 80, 90 cents. That's not much of a gain. Wasn't worth it. So I waited for it to come back down, hopefully, which it did right at the bottom of the channel, close to the 5-day moving average. And I shorted the TVIX right around here on the 44 area. And watch it follow this green line, which is the 5-bar moving average, all the way to the close. And I sold it at the after hours for the profit. So you can see here in my account, so I only shorted a small amount. I shorted 50 at first, at 43.70, and see if it goes lower. It went up to 44 area, which is around this area, which is the tariff news that came out, for about 100. I have a $40,000 account, so about 1/10 of it, and it'll be about $4,400 for the 100 shares. So the average price between these two is about $43.90, and I watch it follow the blue line down, the green line down to this area, about the $41. And after hours, I decided to sell it. Cover. It's called covering. So I shorted it at 43.70, shorted at 44.50, 50 here, 50 here for till 100, and I covered, which means I bought it back at 41.6 or a gain of about $2.20, times 100. So $220 in a matter of about 3 hours, which is decent for me. So one of the things with this, because we're in a down market, this thing can spike very quickly. I mean, you can see these things can spike. These things can go up. The TVIX can go up 20, 30, 50% in one day in the bad market. As you see up here, it could do that in the middle of days. And you don't put yourself in that position, so I don't over lever. If the thing doubles on me, yeah, I'll be down $4,000, but I'm confident I'll get that $4,000 back as it goes back down again. So that's why I don't over lever, because I feel like in the long run I'll get my money back. But we have to have a plan. The plan was, I was short somewhere around here if that happened, which is the 3-day moving average. And it almost came to fruition, not quite, but it came to the 5-day moving average. The spiders, and I shorted the TVIX right around here. You see it's inverse. This started going up, spiders started climbing up, and you see the TVIX started to go down for a gain of about $2.20. And that's it. I'll post more videos and I'll post more stuff like this to explain better. I know it must be kind of hard, but the whole point of it is as the spider moves up, the TVIX moves down. And the great part about this is this thing can move up in a day of $4 or $5. So all you need to short is about 100 shares, and you can make $400 or $500, And if it goes against you, generally I hang on to the position for about a week, and it usually comes right back down again. This is the VIX Trader signing off. Thank you for listening. Appreciate it. Bye-bye.